Good morning and happy Tuesday. Welcome back to the Daily Grind. I'm your host, Chump Change. This is live and recorded. For anybody that might be new here, what we typically do is go over crypto news or news in general in the space. I update myself, bring you guys along for the ride. Let's see who's here in the chat, and then we'll get into this. Mr. Dan R. His vacation starts at 2:30 p.m. today. Woo woo, dude. Good for you. Hopefully you enjoy it. Hopefully you're going somewhere nice. All set. What's up, man? Tradewind Bees, good to see you. Andrew Masad. We have Cape Cod Crypto. Trade Like Snipe. What's up, dude? Good to see you. Steve Mint. Backwards Miner. Let's see. Black Hat Team. Knox Bill. What's up, man? Good to see you. Good to see you. Nismo Miner. My man, Andrew Masad, as always. Appreciate you, buddy. Let's see. Who's this? Twan 430. Appreciate you. I don't think I've seen you before. Good morning. Steven Cicero. What's up, dude? Big Black. Good morning. All right, let's get into this market. Looking like Bitcoin 67,000, 65 bucks.
Bruh.
The hell's going on? Everything's red. Ethereum 35.38. Guys, listen, this looks fine. Looks fine. This is normal price action for crypto. You guys know how that goes, right? Everything's bleeding, but when there's blood in the streets, it's time to buy, right? Solana 154 bucks. You get XRP at 48 cents. ADA's at 42 cents. Damn, ADA is taking a hit, huh? ADA is taking a hit. We have Caspa just under 16 cents. What in the hell? Thought we were making a leg up. No, I think we're retesting. We're gonna retest and we're gonna come back at it. Oh boy, my computer better not start messing up on me. All right, we got ETC at $25. That's taking a bit of a pullback as well since the fifthening. LTC is around $78, almost $79. Not too bad, to be honest. Everything is really on sale. Everything's on sale, so get into it while you can. All right, let's show a crypto bubble, see what the biggest earner or loser of the day is. Let's see. Looks like not this not coin. It's not a coin. We didn't know. This is down to 1 cent, 1.5 cents, down 12.9% on the day. We have Wormhole also down on the day, 12.4% to 54 cents. WorldCoin is down 7.4% to $3.93. Is anybody still into this? Are they still scanning people's eyes for like money? Let me know. I blame Roaring Kitties. Yeah. I just think it's all the Nvidia BS, and like I think honestly a lot of people are going to be investing into stocks right now because it's probably a good move. But again, each his own. We're going to see normal pullbacks like this. Things happen, right? GNO is actually up on the day over here. This is Genosis, 7.9% to $347. We got Bonk up 1.7%. Leo, what is this? 1.2% up on the day, $5.87. I have no idea what this is. What is this coin? It's ranked 21 or 21st. Weird. I don't know what this is. I have to look into that. Sand is down 4.5%. Sand is one of the metaverse coins, Sandbox, right? I actually did invest into this a little bit over on Coinbase. Shout out to my man Dan R for putting that one on my radar. And then we have Renders in 30th place over here, $8.27. Damn,
Bruh.
that one took a hit. That's down 8.2% on the day. Man, fire sale. What are you guys buying? Let me know. Let me know in the chat. Genosis sounds like an STD. Oh God, and this coffee is gross today. It's awful. This day is just going to shit already. Hasn't even started. All right, flashbang. Fear and Greed Index over here, 74, looking like a 74. Wow, it's still actually pretty high for everything being in this red. Kind of crazy, but again, over 75 is where I really care about this, so I think we're still looking pretty good over there. All right, let's show Coin Gecko over here. Trending coins. Mimu the Bull is down 4.7%. We have Mantra down 6%, and MAGA Hat is down 20%. Why is that a coin? Why? Oh my God, people, you guys are insane. All right, top 10 coins by coin market cap over on Coin Gecko. Bitcoin, Ethereum, Tether, BNB, Solana, Lido Staked Ether, USDC, XRP, Dogecoin, and Toncoin still in 10th place. ADA is taking a beating. I don't know what's going on, but it's in 11th place, 42 cents over here at $15 billion market cap. It's still relatively high, right? But man, I guess everything's taking a beating, to be honest. Everything. Man, look at this. Everything's just falling off a cliff. You know what? I bet there's one coin that's up. Let's look. I'm gonna do this for my man Power Minds. See a coin. Oh no, it's not. All right, I lied. Usually when everything's pulling back, see a coin is pumping for some reason. All right, it's like half a penny right now. This is down quite a bit. Ranked 214. All right, let's scroll down a little bit. Let's see. Litecoin 22nd place again, 78.66. Let's see. Ethereum Classic and Caspa have been flirting with each other. I think Caspa flipped it yesterday, very briefly, but I think it's flipped it before, if I'm not mistaken. But yeah, they're both looking pretty good overall. Everything's looking good, regardless of the price right now down. Dynex and Octaspace. You know what? Yeah, Octaspace is one of them coins that it's one of them deep in projects that I have mined. Oh, look at that. Octaspace is actually doing well. $1.78. Nice. Look at that. I wonder if this is gonna be the most profitable coin now on some of them ETC miners. Interesting. And then let's see, Dynex. Oh, let's see. Oh my god, Dynex. Hell yeah, 80 cents. Nice, dude. I saw some of you guys were mining that actually. I was listening to Max's stream last night and I heard, was it Max's stream? I'm pretty sure. There's some people in the chat saying they were mining Dynex now. I'm pretty positive. But 80 cents, man, that's crazy. Pretty decent jump in 7 days. See it last month. Man, they had 40 cents, huh? I really wish this was on Tangent. It sucks. So like the reason they're not on Tangent and they've actually been removed from the list as far as I know is because they need a firmware upgrade and you can't plug in your card to update the firmware. So to get this on the card, they would have to run a whole new line of cards. And yeah, and if you guys are interested in Tangent, my favorite wallet by far. I swap into Caspa and all other sorts of coins right through the wallet directly. CCXD for 10% off is the link in the description below. All right, let's move on to the mining segment of things. What in the hell we got? What is happening right now? What happened to all the Caspa miners? What the fuck? What is going on? That was weird as hell. What did I just have going on there? That like everything was just gone. All right, anyways, moving on. Bitmain, Antminer, KS5 Pro. You guys know like the timestamp DC where the profitability is at during the day. We have the 21 terahash unit making 84.31 a day. We get the KS5 20 terahash unit making $80.29 a day. Let's see, the KS5 M15 terahash unit making 57.46. The KS5 L12 terahash unit making 44.34. You got the Dragon Ball miner and the IB Link BMKS Max 11 terahash units making 37.77. Windminer K9 10.3 terahash making 37.14. This is after 10 cents per kilowatt hour, by the way. The Gold Shell AL box still actually holding in the $30 or $36 a day. That's a 360 gigahash unit at 180 watts. This thing's actually, I'm shocked it's holding as high as it's been holding. Let's check out a lithium. Price of lithium down 3.12% today to $1.84. It's actually better than it was last week, right? Last week it was like $1.50 or a week and a half ago or so. Yeah, $1.50. That was a pretty awful low. But hopefully it starts moving itself back up. But I think to be honest, these big ASIC companies, guys, the manufacturers, before they drop the new AL box or the AL miner, rather ASIC miner, I think they're just gonna flood some money into the market to get this coin to pump. So you guys want to buy these machines, and then you know what happens. If you're not first, you're last. That's how it goes. All right, Ice River KS3 8 terahash unit, $27 a day. We got the KS3 M6 terahash unit making $18.09. Oh, it's going down pretty hard. All right, Antminer L7. You know I got the 9050 version right here. This is my Dogecoin and Litecoin miner down at Terra Hosting. Shout out to them, paying 9.5 cents per kilowatt hour. We have $10.49 a day. 85% of this is actually in Dogecoin, but this thing is still killing it. $10 a day, I cannot complain. The Ice River KS2 2 terahash unit making $5.87 a day. Bruh. I don't even think they make these anymore, do they? Are they gone? Pretty sure they're gone. Not mistaken. Oh, look at that.
It's a fucking good.
Good morning, Geek of all trades, and Mr. Crypto Mikkel. Good morning, Amplifier Gaming. Good to see you, and Yusuf as well. We have Jazzminer X16Q. I do have this thing. Look at this, ETH F. Mining that is most profitable. It's the 1950 mega hashes, $3.58 a day. All right, look at that. Gold Shell KA box. Anybody have one of these? 400 watts, 1.18 terahash unit, $4.20 a day. Profitability on that at 10 cents kilowatt hour. We have the Icer KS0 Ultra 400 gigahash unit making $1.51 a day. Did anybody buy this? Has anybody bought this? I think you can get a discount with code CHUMP on Ice River's website, but I wouldn't recommend jumping into these. That's my opinion. I do have them and I love them for my situation, for my high electric rate and running them on solar. Totally worth it if you're going to do something like that, but going and spending a whole bunch of money on these units, I don't know. This one's making me nervous because the heat alone in the pros are already hot. This one's gonna be like frying egg level, like for sure, because I don't know, this thing's got to be stupid hot. If it's the same form factor, the amount of chips they must have put in this thing, I hope they added a fan. They probably didn't, but I don't know, we're gonna see, I guess. KS0 Pro, these are the ones I have. 63 cents a day after 10 cents kilowatt hour. You guys know I'm making almost $1 a day because it's free electricity, so awesome there. The mini Doge 3s, anybody care about this thing? Anybody? I think these things are a ripoff, honestly. I don't know, I would not buy these. This is my opinion. Hobbyist, what's up, dude? Good to see you. Good morning. I ordered one. Nice, Steven Cicero. Hell yeah, dude. I'm like super curious to see what the heat's like on that thing, so I should be getting one. We're gonna see what it looks like. The original KS0, this is only making 28 cents a day. Bruh. That's terrible. That's pretty terrible. We got 100 gigahashes there, you guys know. That's only making 2 casts per day. 2.7. That's nuts. Where's my S19K? Oh, right here. Look at this S19K Pro, 120 terahash units, still making 19 cents a day. At least I'm not negative. I for sure thought it was gonna be negative today, but perfect. People must be shutting off, so that's not too bad. Could be worse. All right, let's jump over to GPU, see what we're looking like. Most profitable coin to mine over here. This is Gram, I guess. Gram, Ironfish, and Husat. Interesting. Ironfish and Pyron on some of the cards, on some of the 40 series, 4070s. Zealous on the 3080. Nice. Yeah, Gram seems to be like the top coin over here. And AITT. Let's see Gram. What's Gram looking like? This is the same Gram? Why does that logo look different? Is that the same one? Is this it? I don't mind this crap, but if you guys do, hey, listen, mine is most profitable. Swap into what you want. It only uses 100 watts. The heat is only 100 watts. No, Lil Man Lou, it's I understand that, but I'm telling you, 100 watts being forced through that little machine creates a lot of heat. Trust me, if you don't have one of these pros, if you don't know how hot they actually get, it's insane. It's gonna be worse with this one for sure. They definitely do get stupid hot though, because they had to add double the chips, right? Double the amount of chips regardless of the wattage. They're gonna friggin', these things gonna be cooking. I'd be shocked if it's not. You know what, listen, I'll eat my own words if they're not, but is what it is. All right, 3090 Ti Dynex over here. Dynex is looking pretty good today, actually. You guys saw that, 80 cents already. Nice. As we go down, we get Zealous over here, Dynex, Cortex. Let's see. Yeah, pretty much that's pretty much it though. Pretty much it all the way down. AITT. What is this one called again? AITcoin. I don't even know how you're supposed to say that. I have no idea. Anyways, just AI. That's their banking on there. All right, moving on. Let's see new coins. We got any new coins today? Nope. Regus. Actually, I lied. What's this? I don't remember seeing this yesterday. Butterfly Aura. Zytex. Zealous hash. What in the hell? What is this one? If you guys go off the site, please do it at your own risk. My computer's safe, so I shouldn't have to worry about it, but you guys please be careful. Zytex, the first Zealous fork with block DAG of harmonic encryption. Good new. Average block time 15 seconds, maximum supply 18.4 million. Block reward up to 1.46 rather. Block dev fee 10%. What? They get 10% of the blocks? Bruh. That's weird. Odd. Not for me. Butterfly. Let's see what this one is. X11. Again, do this at your own risk. Revolutionary coin. Butterfly transforming the financial future, promoting the flight towards a more sustainable world. Man, with the help of AI, the bullshit that comes out today is just insane. It's just insane. Butterfly was born to support non-governmental organizations and foundations that study climate change with the strength of our network in artificial intelligence, safeguarding an asset of our investors, generating passive income for those who choose us, and appreciation of the value of our asset over time. Hashtag hug a tree. All right, we're gonna move on. We're gonna move on from that nonsense. All right, gold cash, 3 days, if anybody cares. 0.25 going to 0.125, going through a halving. We have CAU going through a hard fork or a hydro fork, whatever the hell they want to call it, 12 days. And then this fake Pepe coin that's not actual Pepe coin, I don't understand it, 17 days from now. It's going through its halving. 500,000 to 250,000. All right, moving on to drama in the news space. We got Musk threatening people, or threatening AI. Device ban if OpenAI, let's see what it says. If OpenAI integrated at OS level. Let's see what he's got to say over here. Guys, that like button, appreciate you for hanging out. Let's do it.
Apple is partnering with OpenAI, and Elon Musk not happy. The Tesla CEO announcing in a post on X that if Apple integrates OpenAI in its OS, he will ban devices at his companies. Musk went on to call the partnership an unacceptable security violation. During Apple's Worldwide Developers Conference keynote, Apple announced ChatGPT will be available for free in both iOS 18 and Mac OS Sequoia. In a statement, OpenAI CEO Sam Altman, who appeared at the conference, expressed excitement at the partnership, noting Apple shares our commitment to safety and innovation. Elon Musk was among OpenAI's co-founders back in 2015. Remember, company's founding statement warned of the dangers of AI if it were built or used incorrectly. Just 3 years later, Musk left OpenAI's board. He's since become a critic of the company.
All right, Musk throwing shade because he's mad now. Let's see real quick. Charlie said, I need solar power for 10 KS0 Ultras and 5 KS0 Pros. Any thoughts? If I were you, I would check out Signature Solar. I don't even know if I have a link in the description, but I did partner with them. I do have a full kit coming. I think either between Friday and like next Tuesday, I have a bunch of deliveries coming. So all of my stuff was shipped. I'm super excited about it. It's a 6,000 XP kit. Yeah, it should be plenty of power. Everything you need, right? So I don't know, look into it before you just dive in and let me be the guinea pig. Don't go blow all your money if it's not going to work, because I do have 10 KS0 Pros and I'm gonna be running like jazz miners and stuff with all the solar stuff. So just wait. That's what I would do. I would wait, look into stuff before you actually like dive in and spend your money, because solar can get expensive. But I'm super excited for all the server rack batteries in that kit. It's gonna be freaking sick. I can't wait. All right, let's see. Feds will signal September cuts in July. Let's see what they got to say over here on Yahoo Finance. Let's do it.
Let's start there, David, with the Fed. I mean, I think our central bankers have made it clear, David, they're in no hurry to cut. But what are you expecting the Fed to say and do this week?
You know, as far as Fed meetings go, I suspect this one's going to be pretty boring, relatively uneventful. I expect the commentary from Chair Powell, largely going to be unchanged from the commentary he's made in the past. So I think likely he'll just mention that they still want to see additional data to get the confidence that inflation's on that steady downward path. I think they'll acknowledge that the economy is slowing, but not slowing to the point that it's necessarily concerning the Fed at this point. So I don't think we're going to get any kind of commentary surrounding, when the Fed will be thinking about the Fed starting to cut the federal funds rate. I think it's really going to be the July meeting that's going to be the one that's going to be a lot more important. We do think the Fed is going to start cutting rates at September. So if they do start cutting rates at September, I think they're going to want to give that indication to the market, at the July meeting. So I think that's when they'll start providing some guidance, maybe remarking that, the Fed has then at that point the higher confidence that inflation's on that downward path, and maybe also mentioning and highlighting that restrictive monetary policy has been slowing economic growth.
What about, we're also, of course, getting CPI on Wednesday morning. And how confident are you that we're going to continue to see sort of deceleration in inflation that will allow the Fed to start cutting as soon as September?
Mm-hmm. Yeah, our U.S. economics team is still very confident that they are expecting moderating inflation in the second half of the year. They look at a lot of different real-time indicators like shelter and rent costs. So those have been coming down for a while. They expect those to start filtering through the next couple of months. So really it's just that combination of inflation starting to moderate, the slowing economic growth. That'll give the Fed the room that it needs to cut We think that they cut at September, probably skip at the next meeting, and then cut one more time at December. So our base case Fed funds rate comes down at the end of the year to that 4.75% to 5% level. But we don't think the Fed will be done there. We forecast the Fed will continue to cut through much of 2025. And in fact, by the end of 2025, our U.S. economics team expects the Fed to get down to 3 to 3.25%.
Let's say, David, your base case doesn't come to pass. The Fed doesn't cut this year. Would that change your view, David, of the U.S. stock market? Does the market need those cuts to move higher?
We do think that they're going to need those cuts to move higher. So right now, when we look at real GDP, our base case is no recession. We're looking for that soft landing, albeit a slowing rate of growth for the next couple of quarters. But that's also predicated on our assumption that we do think the Fed, starts to cut. So if they don't cut, that could put that base case, into jeopardy, and we could slip into a recession, early next year, if that doesn't happen.
David, I want to switch gears for a sec because we've been talking a lot about technology today. We're not done. We're never done when it comes to this stuff. And we recently saw a chart came to us from Torsten Slok of Apollo, which happens to be the parent company of Yahoo Finance. But he's not alone in the observation, looking again at the concentration of large cap tech in the S&P 500. The top 10 stocks overall in the S&P now make up 35% of that index. That's a record. What do we make of that? What do we do with that information, if anything?
Well, like anything else, it really always comes down to the fundamentals of the individual stocks. Now, specifically within technology, the past couple of quarters, I've really kind of been breaking technology into three different buckets, in my own mind. So we have, the AI and the cloud. Again, that's the area that has the highest growth, the best long-term secular trends. But generally speaking, those stocks are pretty fully valued, if not getting to be overvalued at this point. Nvidia, we still see another 4 to 6 more quarters where demand is going to well outstrip supply. But even thinking about that, it's a 3-star rated stock trading relatively close to our fair value. Then I look more at the traditional tech names. Again, that's where we're starting to see, some of the better undervalued opportunities. My concern is that it might be a couple more quarters, before some of those names, start to work, see some value in the semiconductor space, the software and the service space. I still like cybersecurity. Fortinet and Palo Alto are 2 stocks that we rate, 4 stars that we think are attractive. And then lastly, in tech, there's the legacy names, the names that we think the best days are behind them. 2-star rated IBM, 2-star rated Hewlett Packard would be the 2 that I would shy away from.
Thanks, David.
Interesting. All right, give me 1 second. You guys are gonna hear something, I think. Gotta pause this. All right, I had to grab the link for that solar stuff. Give me 1 second. Dude, I hate how YouTube changed things. Like, why do they have this all over here now? I can't stand this. It drives me nuts. Like, how do I get to my comments? Where are the comments? Where are the comments? Oh my god, I gotta scroll all the way down for that? That's ridiculous. All right, this is the link. Copy link address. I should probably put this in my description, actually. You know what? Give me 1 second, people. I should probably put this in the live stream because I don't I don't have it on there. All right, let me throw this in the live chat for you guys. Somebody asked. I will look, I'll open the site and look for the kit for you in a second. I just haven't had a chance to do so yet. All right, 1 second. Sorry, guys. There you go. All right, that's Signature Solar. I just copied the whole thing. I'm gonna pin it at the top. If you guys are interested, go check it out. That's my referral code. You don't have to purchase anything through it. I don't care either way. I supposedly get a kickback. I don't know how that works, but you do get a discount if you use code ChumpChangeXD. So feel free to do that. All right, let's see. Over here, Nvidia is going to take the largest share of AI's impact. Let's see what they got to say over here on CNBC television. Let's do it.
First trading day after Nvidia's 10-for-1 stock split that took place on Friday after the market closed. Let's check on the stock, which is UNCH. Joining us now for more is Chris Casso. He's a Wolfe Research senior analyst. And there's so many other things that you write about, Chris, fundamentals, but does anything matter more than when you take a $3 trillion company and you do the split? And any gains you have from here, and we really do need to look at that in terms of where that puts the market cap, because, I mean, trees don't grow to the sky. We always say that. I didn't know, it was hard to get to $1 trillion when Apple first did it, then 2, and then you got Microsoft and others. But $3 trillion, how much more is Nvidia worth right now, given its future, would you say?
Well, I remember having this discussion when Apple hit $1 trillion with you, and it's still higher. And listen, it really comes down to the fundamentals, to what's their place in AI, where the content's going. And this is still a really good story here. And what I think is important is obviously, the impact on AI and such. But NVIDIA content is going up significantly. And this isn't a stock where, the multiple has expanded over time. The stock is where it is because the earnings have kept pace. It's only trading at about a mid-30s multiple off of this. So, it's been an absolute incredible run, but it has been absolutely backstopped by the fundamentals.
So you're on next year's earnings. What do you mean? It's like 35 to 1? Yeah,
that's right. And as we look, it's been our best idea for the better part of year and a half. Since October 22, we put it on a top picks list. Interestingly, the stock before the split, the stock is higher after the split than it was back in October 22 before the split. So it has been an incredible run. We did recently take.
So what a stock split is, basically what they do is say like Nvidia was going for like $1,100, just because somebody asked in the chat. They split it so 10 to 1. So if you have an entire Nvidia stock, like you have $1,100 worth of Nvidia, right? That's one whole share. They divide that into 10. So you're going to have 10 shares instead of just one. It lowers the price and it allows the, I guess, the average person to be able to invest into the company easier by getting a full share at $120 or so, right? And it's just, honestly, it happened to Tesla. Tesla's done it. There's been so many companies that have done it, and it actually does drive the market up over time, just because, again, ease of getting into it, I guess.
Take it off of our top picks list and replaced it with AMD, just acknowledging the very strong run that it's had. And as you said, trees don't grow to the sky. But we are still very bullish on the fundamentals looking into next year because of the next product cycle.
Typically, it's a 25% move after a split like that. So, I mean, then you're talking about more than $3.5 trillion at that point.
Well, they announced the split on earnings back in May, and it's had a pretty strong run since then. Okay. So I guess I'd argue that it's reflect. If the stock was in, of course, the split doesn't affect the fundamentals, but right. It has had a strong run since earnings, and perhaps the split had something to do with that.
So all in with factor in competition and where we are in the adoption of AI and the use of chips for both of the segments that it causes, to set it up and to build it out and everything else. What kind of compound growth rate do you see for NVIDIA over the next 5 years for earnings?
Well, and things are moving very quickly in AI. But
did the price of NVIDIA stock go up since the split, or was it $1,200? I don't know, actually. That's why I said I thought it was like $1,100, if I'm not mistaken, and it might have risen over the last couple hours, I guess, or the last day or so, right, at this point. But this was yesterday, so this is at $120. I don't know.
It's been running at, revenue has been, doubling, more than doubling year on year for the past several years as AI has taken hold.
It was 1,200-ish, all right. So that makes sense.
What I think is interesting in NVIDIA and semiconductors in general is that now we're seeing pricing go up too. And it's not pricing going up just because they're taking price and raising price indiscriminately. It's because, at the end of Moore's law, if you want more performance, you have to pay for it. And AI is driving a lot of productivity in the economy. And this next generation of NVIDIA chips is much more productive. And the tagline, what Jensen Huang says is, the more you buy, the more you save. So what's happening is, and the answer to that question over time is difficult to quantify, but the extent to which AI drives productivity in society, NVIDIA is going to take the largest percentage of that because they're the ones enabling it.
Right. But if the multiple stays, I mean, it's not cheap. It's not crazy, but mid-30s, mid to high 30s is not cheap. The stock appreciation will maybe mirror the compound growth rate of earnings per share. Do you think it can grow at 20% a year for 5 years, earnings per share?
I absolutely do. Absolutely.
30%? I'm just wondering what.
And I think growth rate in the 30s is a very very reasonable approximation on it. And again, one of the proxies that helps you to get to that number is generation on generation pricing for this next generation looks to be about 40%, and they're coming out with product every single year. In addition, they've expanded their networking portfolio, and going forward in AI, networking is going to be a much bigger driver of performance as well. So there's a lot of irons in the fire. Pricing's going up, and obviously AI is doing what it's doing. So I think a growth rate in the 30s is absolutely reasonable. And again, with a stock multiple in the 30s, that it's a peg of about 1.
There will be competition, obviously. I don't know who you think is a viable competitor bet. Are there any competitors that are in a good position that don't cost $3 trillion for the company, or aren't it in the mid-30s for multiples? How do you play AI besides Nvidia, or do you, since everybody's still spending money, you know, with the future rewards, we don't know when they're coming, really.
Right. So it's one of the moves we made recently is that we put AMD on our top picks list, and that would be your alternative in AI. You know, the stock hasn't had as much of a run. The multiple's actually similar in the mid-30s right now, but you know, it's a little bit of, you know, law of large numbers, law of small numbers. AMD has a lot to potentially gain in this market as a number 2 to Nvidia. And our thesis on AMD is pretty simple. You know, they were able to get, you know, kind of a 15% or so market share in the x86 CPU market for many years with Intel, even when they were a generation behind, because the customers don't want one supplier to have, you know, 100% market share. And, you know, we think with that right now, AMD has less than a 5% share of AI. So, you know, there's a lot to potentially gain, and NVIDIA doesn't need to lose in order for AMD to win, which is why we put that on our top picks list more recently.
Okay.
Interesting. All right, real quick. This is the kit that I got. So everybody that was asking, it's the 6000 XP. I got this rack too with all these batteries, but I have 6 batteries coming, so it's going to be a completely loaded out rack. But it's supposed to be, you can get 8,000 watts of panels going into it. I'm going to have this 6,320. My kid is coming down to bother me right now. And then I got, again, the batteries. I have all those. And yeah, these things, you can parallel these things up to 16 units, which is the reason I went for this, because it's more affordable for you guys to purchase and then just expand later versus, you know, buying something that's massive when you really don't need to do that right off the bat. So in my opinion, I think going with something like this that's a bit cheaper, I mean, not saying this is cheap, but just in general, like this is the whole kit obviously, but the unit itself's like $1,500 for this, just the inverter itself. So you guys do what you want, feel free. All right, let's move on over here. Fun strat. Apple, Nvidia, and Tesla should be core portfolio holdings. Let's see. I think this is Fun Strats Tom Lee. Let's get into it.
Obviously, the Fed meeting kicks off today. Kind of a big week when we look at CPI and the Fed decision. But I want to focus on today first. What's your WEX word of the day? How do you see today shaping up?
Well, the WEX word of the day is visibility, because that's what's getting investors anxious about the next couple of days until we hear from the Fed and CPI. I think investors are anxious and they want visibility.
All right, so looking for some visibility. We got some visibility yesterday from Apple. We've been waiting for WWDC and their big artificial intelligence unveil. Stock closed down 2%. I want to get your take on what you heard and what you saw and what you think about the stock.
Well, Apple is one of our granny shots. It's a stock that we think investors need to really hold for the long term. The company has always been at the center of everything that's happening around a consumer and new technologies. So to me, there might have been some head scratching because these features may not be part of someone's life just yet. But as you know, Apple gets a lot of these things right.
All right. So by the way, for the audience, your granny shot, it's kind of like almost a very easy shot. You think it's almost a no-brainer when it comes to that stock, right?
That's right. I think investors should look at it as a core
Granny shock goes to the glasses.
portfolio holding. The Granny Shots is basically a thematic portfolio that buys the strongest stocks in a specific theme. So when you think of AI and millennials, Apple and Nvidia and Tesla, I mean, they're really at the center of that.
All right. But your sector picks when it comes to the AI trader, Nvidia, Cadence, ARM, AMD. Why isn't Apple in there if you believe that it's a core holding and obviously they're pushing into the AI space?
Well, mainly because Apple is much more than just an AI company. So I don't think it's intentional that we left out Apple when we talk about AI trades. But when our clients are looking for direct beta exposure, to them, the complex is Nvidia, and then stocks with high correlations to Nvidia, which are the ones that we actually listed.
All right. So, Tom, know what you're intentional about? Small caps. You've been one of the biggest bulls when it comes to small caps, specifically the IWM ETF. I'm just looking at the small caps since the last Fed decision. They're up 3%. The rest of the market's up about 6.5%. They've been lagging all year long. Is there still a case for small caps to rally as much as 50% this year in your mind?
Oh, yeah, definitely. I mean, one thing investors have to keep in mind is small caps get hampered when investors worry about lack of visibility. When the Fed begins to cut and we actually have shown this to our clients, and the number of expected cuts begins to creep up, that has been correlated with the IWM outperforming the broader market. So the reality is the stock market is saying, look, I don't want to touch small caps until the Fed starts cutting. But in the meantime, small caps have better earnings growth, close to 19% in the Russell 2000 versus around 9% for the S&P. And the median PE multiple is actually around 10 times in the Russell 2000 compared to 16 times for the S&P. So better growth, lower multiples. I think it's a great risk reward for investors right now.
But aren't they also more rate sensitive and also more sensitive to the higher cost of capital and the higher for longer environment? I mean, you keep saying that investors don't want to touch them until the Fed starts cutting. We don't have any clarity. We might get some answers tomorrow, but it's unlikely. The Fed's been very clear. They're data dependent.
Sure. But I think what you've just described, which is higher cost of money or, a high bar for borrowing money, that's the existing conditions. So when the Fed starts cutting, that starts to ease. What would investors benefit from is having exposure to things that are levered to an easing of financial conditions. That would actually argue for small caps. So it's a bit of a waiting game, but boy, I don't know anyone who's made money trying to trade this week to week. Any great ideas. All the great ideas take time to work.
Wow, fair enough there. Is there any part of the small caps that you think are better than others? All small caps aren't created equal.
Well, one thing I think investors have to keep in mind is that they might think a small cap is like a weak company, but actually small caps, especially in the Russell 2000, tend to be very strong companies that dominate a smaller market. So that's why, they're not $1 trillion company, but they might be number one.
All right, let's move on. Let's see. Robinhood's deal with Bitstamp. Good sign for crypto industry. All right, let's get into this CNBC crypto world. Guys, that like button. Appreciate you for hanging out. Let's do it.
Okay, let's talk about the top stories. Ether just saw its best week of inflows since March. That's according to this report from CoinShares out today, which notes that inflows totaled $69 million in the first week of June and is likely in reaction to the, quote, surprise SEC decision to approve a rule change that would pave the way for spot Ether ETFs. The SEC's order on May 23rd approved applications from various exchanges to list 8 different Ether funds. The order technically does not approve the funds themselves or set a date for the ETFs to start trading in the U.S. The CoinShares report also notes that crypto investment products saw inflows totaling $2 billion in the first week of June, helping to extend a 5-week run of more than $4 billion. The asset manager says that trading volumes in ETFs rose to $12.8 billion for the week, which is up 55% from the week before. The report also notes that BlackRock's spot Bitcoin ETF now, quote, comfortably surpasses incumbent Grayscale's ETF with just under $21 billion of assets under management as of June 7th. Next, Architect Partners, a crypto M&A advisory firm, says Robinhood's acquisition of Bitstamp is a good sign for the crypto industry and shows valuations have come back to earth. According to the report, the Robinhood Bitstamp deal is an important marker of the current market. Valuations have right-sized again, and parties on both sides are beginning to bridge the recent gap in expectations. It goes on to say that the deal also shows the value of cash as a form of consideration to allow the facilitation of transactions, and that often in today's M&A market, equity is offered as a large component of consideration, creating a myriad of challenges to transaction completion. Architect also emphasized that the deal would expand Robinhood's global reach, which it says would ensure its global participation in crypto trading at a time when its crypto division is under scrutiny by the SEC. The acquisition was announced last week, about a month after Robinhood disclosed that the SEC had sent it a Wells notice and warned that upon completion of an investigation, the trading platform could be charged over its crypto operations. The report also said that Robinhood's announcement of the acquisition is, quote, not the behavior of a public company that is intimidated by the SEC. All right, turning to markets for our main story. Until recently, Bitcoin has struggled to hold on to the $70,000 level. I spoke with Raphael Zaguri, Swan Bitcoin's chief investment officer, to find out what could help Bitcoin break out from there and how the Federal Reserve and U.S. presidential election factor into his crypto price outlook.
It has been an interesting year for Bitcoin. We saw, new highs at the beginning of the year, and we have not seen them since. But, we have a pretty key Fed meeting coming up this week. What are you expecting heading into the week, and how does that affect your outlook for Bitcoin?
Yeah, thanks for having me. I think it's super obvious that, ultimately at some point rate cuts are probably coming. If you just look at what happened in Europe, right? Europe is heading that direction. And I think ultimately that's what's going to happen. Timing is always uncertain, like with everything in the Fed, right? If we look back to 2020, they made a very strong stance that, if you remember, Powell was saying we're not even thinking about raising rates, and we now know where that ended, right? So I think the Fed is going to be the same thing. They're going to be saying that there are no changes in the horizon, that things are going to be stable, predictable, when we know, in fact, that's not the case. If there's one thing we know about monetary policy, that it's not stable, it's not predictable.
What's driving things right now? I mean, how big of a catalyst would you say this upcoming Fed meeting is? What is driving things overall, given that, we had our two big catalysts for Bitcoin, the halving and the ETF launches, they're kind of behind us now.
Yeah, I think, zooming out, as you mentioned, right? I think if we look at the big events of this year, the ETF is still, I think, by far the most important one, at least in terms of what it really means for Bitcoin in the long term, right? Let's put things in perspective. If we just look at the amount of Bitcoin that was accumulated in the ETFs, right? There's more than 1 million Bitcoin that are actually being bought by BlackRock, Fidelity, the major financial firms. So think about that. If we went a year ago and I told you we're going to have an ETF, not only we're going to have an ETF, but 5 months after the ETF is launched, we're going to have 1 million Bitcoin sitting at the ETFs on behalf of the clients from these institutions. People would think you'd be crazy, right? And the floodgates are open. That has been happening. It's by far the most successful launch of an ETF that we've ever seen. Just like if any new technology, right? In the beginning, we're all worried about it, but eventually, when you look at it and you really understand the value that it has, not only in an asset allocation perspective, as I said, but on a fundamental level, what this really represents as a savings technology to the world, then people really buy into the idea. And I'm starting to see a lot of that coming from institutions as well. Before they looked at Bitcoin as a trade, right? They looked at the price like, oh, here's where the price is. I'm going to buy it, just as a trade. Now they're looking more into, okay, so where do I put this in our portfolio? Does it fit within real estate, long-term assets, hard assets, in gold, right? Which clearly, I think, signals a shift in perspective of where Bitcoin is in the cycle, and I think on the adoption scale. So I think the future is very promising to what we're seeing, given the adoption that we're seeing.
In the past month, ETH ETFs, have seen some developments, and that brought us to a bigger story about the political tides shifting for crypto in Washington. We hear so much about how Bitcoin or crypto broadly has become, a growing matter of interest, regarding the US presidential elections. I am not always sure, some days I think I need a reality check on, just how key of an issue that may be for these elections. But I do want to ask you about the reverse, being that the main catalysts for Bitcoin are behind us now. Do you see the election as the next big catalyst for Bitcoin?
Potentially, yes, right? So as you said, let's step back again and let's think. If I told you a year ago that we would have presidential candidates talking about Bitcoin would be actually in the center of politics, no one would believe, right? So that just shows when we think that adoption is not quick enough, that we want to see more people adopting it. Just think about these things. I think adoption is going just as expected with anything that it's new. And actually, I would say that it's above expectation in many cases. But to your point, I think that, seeing the things that we've seen, even the Ethereum ETF being approved, having Trump comment about Bitcoin, it answers, and I think it puts to rest the number one question that I used to have from institutions, which is, you go through Bitcoin, you explain everything to them, they may understand the fundamentals, they may understand everything. And at the end, I can't tell you how many times people will tell me, yeah, if everything you're telling me is right, and if I really understand how Bitcoin works, governments are never going to allow it, right? This is going to be banned at some point. And I think this is showing us that not only governments are not going to allow it, but they're going to have to embrace it, right? Because if they don't embrace it, they're going to have a bigger problem, right?
And so going back to the election as a catalyst, how big of a catalyst do you see that being, and how do you expect to see that play out? Like is there a big run up to November? Or is this something that we see kind of move on the news later at the end of the year?
Yeah, I'm much more excited about Bitcoin again as a technology. Like if we look at this year, the halving excites me much more than politics, right? And elections. I do think that a lot of people listen to elections, and I think depending how this goes and how it's already happening, right? It may be a catalyst, and we will see more people getting interested. Particularly, people come from Bitcoin is this weird asset where it has so many different characteristics that people approach it, from different angles. So, for example, somebody like me who's an economist will approach it from the economic side, right? So I'll look at scarcity, I'll look at price, I'll look at those things. If you're in the tech side, you're going to approach it through the technology angle. You're going to look at, okay, so I want to see, what the protocol is. I want to see, how exactly the issuance of coins that happens, the halving, all of those things, right? And that's true, I think, across different disciplines, including politics. And I think a lot of people are going to approach Bitcoin from the political side as well, and they're going to see it what it ultimately is, which is also it's freedom money, right? It's money that you can use without anybody having to tell you, if you're allowed or not allowed to use it.
Okay, that's all for crypto.
I feel like they just cut him off really oddly. Anyways, all right, let's move on to the videos of the day. Lark Davis, his video qualities went down quite a bit, but Ethereum to 154K by 2023. I don't know. That's a lot. That's a lot. But shit, I love it. Just saying. Let's do it.
There is an insane and imminent supply shock that's coming to Ethereum. Are you prepared?
Look, I honestly didn't know that title said that when I clicked on the video.
Queue up all the super bullish ETH price predictions, and I have one for you that is going to melt your face. You don't need it anyway. With the price of Ethereum going this high, you can buy a new one, okay? Ethereum's price
must be traveling or something.
$154,000 per coin by 2030. That's the kind of bull energy I'm here for. Let's go. That's according to ETF issuer VanEck. By the way, in this video, I'm going to break down VanEck's thesis here for Ethereum's price rise and outline all of the components that are building us towards this insane supply shock and massive wild price prediction. Because this one, it's like a firecracker waiting to explode. And stick around till the end of the video, of course, to find out exactly what role the upcoming Ethereum ETFs could play in this situation. It's a very important part of the conversation here. Now, look, $150,000 per token for ETH. That's a lot of opium, man. So let's look under the hood of this wild price prediction to try to work out just how realistic it could actually be. VanEck, of course, already has a physically backed Bitcoin ETF on US markets. It now has an Ethereum ETF version coming soon as the SEC allows them to start trading. So they do have a ton of data to pull from. Now, they just dropped a new report on June 5th called ETH 2030 Price Target and Optimal Portfolio Allocations. Inside the report, VanEck sets out 3 different scenarios for Ethereum. A base case of $22,000 per token by 2030, a bull case of $154,000 per ETH, and a bear case of just $360.
Wait, hold on. What? This is like they got Timmy drunk and they gave him some darts and he just threw it at a dartboard and whatever it landed on, that's what they're calling for. What? $154,000 and the base case is $22,000. That is like the craziest spread I've ever seen. 360. What is happening?
Per ETH by 2030. That's quite the range. But even the base case, of course, is still a 6x from the current price around, let's say, $3,800 where we're at today. VanEck believes Ethereum can become a high growth commercial system that threatens to disrupt existing financial businesses and big tech platforms like Google and Apple. They see that Ethereum is already disrupting.
That would be very interesting, actually. Because Ethereum is kind of like the tech industry of the crypto space, right? Kind of like everything's built on it, or a lot of things are built on it, rather, not everything. But I mean, yeah, that's the route it's going.
The finance world, the banking world, the payments, networks, marketing, advertising, social media, gaming, infrastructure for the internet, AI.
Yeah, more like space case, Ismo.
All that kind of stuff. So it's focused its price projections on forecasting key metrics like market share, revenue, token supply, and free cash flow. So when it comes to market share, VanEck estimates that Ethereum's current smart contract market share is 58% on a trailing 12-month basis. So it's forecasting that Ethereum will get to the base case by taking 70% of the smart contract marketplace. I guess that would be including their layer 2s. And for the bull case, it will need to take almost the entire thing at 90% of market share. And I'm really not sure what's going to happen. You have Solana and those other networks that'll be there too. No smartphone has 90% of market share, for example. Anyway, it's then for
the thing here is like somebody said, how can how can there be a supply shock when Vitalik Buterin can just make more? So like, yeah, theoretically you could just make more, but the way that Ethereum is put into the space now is from staking, it's not from mining. So the supply shocks, like the supply coming out, is way lower than it's ever been. And with the ETF coming, there's only going to be so much available. So unless there was some reason for him to put out more coins, it is going to be a giant supply shock.
Forecasting revenue will jump from 3.4 billion to 79 billion for the base case and 362 billion for the bull case. VanEck also notes that the free cash flows from Ethereum from revenue will hit $66 billion by 2030 to help push it up to those crazy price targets. And of course, scarcity matters, obviously. So Ethereum's token supply must turn deflationary once again in order to boost up its price, which requires more users on the main chain. Now, VanEck
Bell Miner says, so they're predicting somewhere between $360 and 154,000. Great analytics.
Cast the ETH supply to drop from around 120 million currently to 100 million for base case and 99 million for bull case. Now, for these forecasts to go from paper hopium fantasy predictions to paper gains for Ethereum is going to need a whole lot more builders and investors and users. If there's one thing VanEck is counting on to boost demand, it is those hot, sexy, newly approved Ethereum ETFs. And we all know what happens when there is too much demand and not enough supply. Numbers go up. But before I talk through the supply and the demand pressures we're currently seeing and that could send Ethereum skyrocketing, let me interrupt the flow real quick to let you know about the best. Let's talk about Ethereum's supply shock because it is creeping up on the crypto market pretty gosh darn fast. Since the Ethereum ETFs were approved on May 23rd, over 800,000 Ethereum worth more than $3 billion has been moved off of centralized exchanges and into cold storage. Prior to this, around $500 million worth of Ethereum left exchanges in 1 week alone in April, the highest levels at the time since February this year. Which means the market ain't selling. They're buying right now, leaving only 10.6 of the total Ethereum supply on exchanges. 10.6%. That's crazy. This puts ETH on exchanges at its lowest levels in 6 years. Then it's speculated that there's only around 400 ETH left on OTC desks, which is pretty wild. And OTC desks are kind of opaque and those numbers can change fast, but still crazy. And it's crazy because the physically backed Ethereum ETFs in the US aren't even trading yet. What happens when they start trading? Where are they going to find all this Ethereum? Now, look, as long as Grayscale doesn't flood the market with all of its ETH, and they probably will like they did with GBTC. So, keep that in mind. Anyway, this supply shock could get pretty wild, pretty fast. Maybe we'll have to have a few weeks of pulling off the Grayscale band-aid, so to speak. Anyway, as Ethereum's price begins to pump during the later stages of the bull market, its token burn mechanism should start to kick into overdrive and to turn Ethereum deflationary again, perhaps quite aggressively. So now, if you don't already know, Ethereum burns a small amount of ETH with every transaction. The transaction fees, basically, that you pay end up getting destroyed forever. Now, another factor that could contribute to the supply shock is staking and restaking of the restaking. It's a house of cards, so that's in the conversation for the other day. Anyway.
Yeah, but is he ever going to mention that it is unlimited or not?
Ethereum still has a massive opportunity for growth through its staked supply. Whilst the amount of staked Ethereum has grown by 78% since its Shanghai upgrade in April of 2023, only 27% of the circulating supply is currently being staked. Ethereum is the biggest proof of stake blockchain by market cap, but here's interesting. When you compare its staked supply to other layer 1 networks like Solana, Sui, whatever, most of the others, in fact, it ranges anywhere from 48% to 81%. Ethereum is one of the smallest by total percentage. Now, as ETH continues to grow, more ETH gets locked up in staking. That's less ETH out there in the open market. Remember, 2-year plus exit queue for everyone to unstake right now. Okay. Now, especially if we see liquid staking and restaking on Ethereum's layer 2s continue to grow as it has been, then even more demand here. Now, if you're not already familiar with the concept, restaking allows users to take ETH they've already staked with Ethereum and then to restake it for extra yield to help secure other apps and other protocols in the ecosystem. Now, the more incentive that there is to lock up your ETH tokens, the less users are going to want to sell in the short term. Now, for what could be the mother of all demand shocks, of course, the Ethereum ETFs themselves. Demand from Wall Street and their stock market clients will have a massive impact on Ethereum's total price in the long run. Even with a fraction of Bitcoin's ETF inflows, ETH could be primed, with Bitcoin, of course, being the number 1 cryptocurrency and Ethereum being the number 2 cryptocurrency. Together, these two cryptos make up 60 to 70% of the entire cryptocurrency market. Now, I know the expectations are lower because it is number 2, but it also means it needs less money to move the market. And the dynamics are different, again, because of the staking and all that kind of stuff and the restaking. The Bitcoin ETFs in the US have reached the milestone of holding 1 million BTC worth over $70 billion combined, all within the first 5 months of trading. While it's unlikely Ethereum is going to pull in those kinds of numbers, K33 Research is forecasting that ETH ETFs could see up to 1 million ETH in the first 5 months, which is pretty damn significant. Again, only 10 million ETH on exchanges right now. That's $4 billion in inflows, and that feels kind of bearish to me. I feel like we're going to get a bigger number than that. That number is based on a couple different metrics. Firstly, a comparison between the assets under management in existing ETH-based exchange-traded fund products, ETPs around the world with similar Bitcoin products in similar markets. And secondly, the open interest in futures contracts on the CME exchange. So showing what the actual demand for Bitcoin versus Ethereum is. Now, to get an idea of institutional demand, if they're right, and up to 1.26 million ETH is accumulated by the new US-based ETFs, then that's around 1% of the total supply sucked away into these new products. That's not only the access to ETH that institutions want, of course, it's the revenue from management fees and Ethereum's yield. BlackRock now has $20 billion worth of Bitcoin and assets under management and a 0.3% fee. That's generating revenue of around, I don't know, a lot, let's say. Truckloads of money every single year will be made off of that. And that's without any revenue, of course, from staking, which Ethereum could have in the future if the SEC allows it. Now, once the ETFs finally start trading in the next few months, I wouldn't be surprised if the ETF issuers put pressure on the SEC to allow staking, because, of course, BlackRock is going to want that. Now, the SEC can only deny a staking feature for so long. It will happen at some point. Galaxy Digital's Mike Novogratz thinks we'll see staking in the Ethereum ETFs within 12 to 24 months. With all of this bullishness,
oh, wow, that's actually kind of neat,
hitting ETH at the same time from all directions, it seems, the market could find itself in a
if they enable Ethereum staking in the ETF, that actually would be huge.
Pretty interesting place. The continuous cycle where the supply shock fuels a demand shock. Prices going up is, of course, the best advertisement.
I didn't even know that was possible.
And that's creating an even bigger supply shock and so on and so forth, creating a virtuous cycle until essentially you run out of buyers and we hit the next bear market. Probably not bullish enough on Ethereum. Probably going to 15K this market cycle, long term by 2030. Hey,
15K, I don't know. Maybe we'll see, I guess. I think 7 to 10K is probably more realistic for Ethereum. That's just my opinion, but you guys let me know what you think about it. All right, moving on. Altcoin daily, Bitcoin price, Fed meeting. What happens next? Let's see what he's got to say over here. Let's do it.
I think it's super obvious that rate cuts are probably coming.
With near 100,000 Bitcoin having been taken off exchanges in the last 30 days, 54,000 from Kraken, 25,000 from Coinbase, Ethereum supply seeing similar metrics, hitting an 8-year low on exchanges, with almost 5% of the entire Bitcoin supply being scooped up by ETFs. 34 ETFs now hold over 1 million Bitcoin, BlackRock leading with over 300 Bitcoin. With blue chip AI company Nvidia having a successful stock split, Apple announcing their continued foray into the AI space, Bitcoin and the entire crypto market is ready to pop. Why? Because the Federal Reserve is about to pump crypto and all risk assets to high heaven. Guys, smash the like button, support the channel. Let's talk about Bitcoin price and crypto markets. What happens next? So there's a Fed meeting coming up this week. Rate cuts have been expected all year. So far, that has yet to happen. Will the Fed cut rates this week? Well, Vegas odds put the chances of that happening at about 2.2%, down from 70% earlier this year. The CIO of Swan Bitcoin details exactly what is expected with the Fed meeting this week. Listen to his answer.
We have a pretty key Fed meeting coming up this week. What are you expecting heading into the week, and how does that affect your outlook for Bitcoin?
Yeah, I think it's super obvious that, ultimately at some point rate cuts are probably coming. If you just look at what happened in Europe, right? Europe is heading that direction. And I think ultimately that's what's going to happen. Timing is always uncertain, like with everything in the Fed, right? If we look back to 2020, they made a very strong stance that, if you remember, Powell was saying we're not even thinking about raising rates. And we now know where that ended, right? So I think the Fed is going to be the same thing. They're going to be saying that there are no changes in the horizon, that things are going to be stable, predictable, when we know, in fact, that's not the case. If there's one thing we know about monetary policy, that it's not stable, it's not predictable.
So the odds of a June rate cut are very low. The odds of a July rate cut, very low. These both had great odds near the beginning of the year. So most people aren't thinking about these rate cuts happening like they were at the beginning of the year. However, that doesn't mean they're not going to happen. There's a 50% chance that they cut rates in September. It's basically just a little bit more than a toss-up. Investors see a 50.5% chance of a quarter-point rate cut by September 17th, 18th Fed meeting, with a tiny 4% chance of a 50 basis rate cut. November, the odds increase. The odds of a quarter-point rate cut are 64.4% by November 6th, 7th meeting, which ends 2 days after the U.S. election. There's a 17% chance of a 50 basis rate cut by then. The final meeting of the year for the Federal Reserve is December 17th and 18th. Investors see an 86.3% chance of a Fed rate cut. The fact is, the U.S. markets are about to be blindsided by Fed rate cuts happening one after another as we get towards the end of the year. This is exactly the sentiment and analysis that politician and financier Anthony Scaramucci echoed in our interview from a couple days ago. You need to prepare for this. This is going to pump Bitcoin over 100K and altcoins a lot higher.
I have been in the camp that we're going to get 2 and possibly still 3 rate cuts. And people look at me like I'm crazy because we were 7 rate cuts and then we went to 0 rate cuts. I think the consensus now is 1 rate cut, but I actually think it's going to be more than. I believe that. Yes, I do believe that. I think they're going to come in the months of October, November, December. And I think what's going to end up happening is the Fed's going to move 25 basis points a clip at the end of the year because they're going to be behind the curve if they don't do that. The economy is weakening. You just saw the data that came out in housing markets. The housing market is slowing down. New mortgage applications, refinancings, slowing down. And housing, whether we like it or not, is still a very large heartbeat in America. And I'll just remind your viewers and listeners that jobs are created in the United States by small businesses. Big businesses generally don't create the jobs. They stay at a rough equilibrium in terms of quotas. Small businesses create job growth, and 60% of the small businesses are tied to U.S. housing. Just go down your local Main Street, you'll see a hardware store, sheetrock guy, plumbing guy. They're all there. There's a bank there that lends out mortgage money to people's houses. There's real estate brokers on that block. And if you look at it, about 60% of it, insurance agents that are selling you property and casualty insurance, fire insurance for your home. It's all there. And when you have a slowdown in housing, you hurt those small businesses. And so the Fed knows this. And I believe that the Fed will start cutting rates. Will inflation be near 2%? And I'm going to tell you something. It already is. And I would ask your viewers and listeners to please go to truflation.com, truflation.com. And what that is a decentralized aggregator of pricing data from around the United States. And you'll see that number is at about 2.3%. You say, well, why is the government reporting a different number? Well, there's an expression that there are lies, Aaron, and there are damn lies, and there are statistics. So lies, damn lies, and statistics. The government can make these statistics look any way they want, and they change the inputs. So we don't think it's accurately reflecting the drop. It's a lagging indicator, those CPI numbers are using, and we think there's a larger drop. and a result of which I think you're going to get the rate cuts. You get the rate cuts, you're going to get a tear in Bitcoin. You're going to get a tear in risk assets. And I don't even think they're that overpriced. There's a lot of good things happening in the economy, and the earnings have generally been good.
So 3 rate cuts, get a tear in Bitcoin, get a tear in risk assets.
Bitcoin's over 100,000 by the end of the year. That's my honest opinion.
Guys, make sure you get your tickets to Bitcoin Nashville.
Nope.
To pop, record low supply, record high demand. Rates will be cut probably multiple times going into end of year. This will make all risk assets explode, combined with the US election, combined with Bitcoin and Ethereum finally being desired and accepted by institutions. Subscribe to our channel, Altcoin Daily,
You guys think
for
Litecoin's
daily
next?
videos keeping you focused and up to date. Listen to the experts. Listen to the people who study this every day, work in the industry. Like here, it's obvious what's about to happen. Listen.
What is driving things overall, given that, we had our 2 big catalysts for Bitcoin, the halving and the ETF launches, they're kind of behind us now.
Yeah, I think, zooming out, as you mentioned, right? I think if we look at the big events of this year, the ETF is still, I think, by far the most important one, at least in terms of what it really means for Bitcoin in the long term, right? Let's put things in perspective. If we just look at the amount of Bitcoin that was accumulated in the ETFs, right? There's more than 1 million Bitcoin that are actually being bought by BlackRock, Fidelity, the major financial firms. So think about that. If we went a year ago and I told you we're going to have an ETF, not only we're going to have an ETF, but 5 months after the ETF is launched, we're going to have 1 million Bitcoin sitting at the ETFs on behalf of the clients from these institutions, people would think you'd be crazy, right? And the floodgates are open. That has been happening. It's by far the most successful launch of an ETF that we've ever seen. Just like if any new technology, right? In the beginning, we're all worried about it, but eventually, when you look at it and you really understand the value that it has, not only in an asset allocation perspective, as I said, but on a fundamental level, what this really represents as a savings technology to the world, then people really buy into the idea. And I'm starting to see a lot of that coming from institutions as well. Before, they looked at Bitcoin as a trade, right? They looked at the price like, oh, here's where the price is. I'm going to buy it, just as a trade. Now they're looking more into, okay, so where do I put this in our portfolio? Does it fit within real estate, long-term assets, hard assets, in gold, right? Which clearly, I think, signals a shift in perspective of where Bitcoin is in the cycle, and I think on the adoption scale. So I think the future is very promising to what we're seeing, given the adoption that we're seeing.
Interesting. All right. Well, shout out to Altcoin Daily for that. Let's, I guess, get into the recap segment of things. All right. Oh, what am I doing? Didn't mean to do that. Hit the wrong button. My bad. My bad. All right. Let's see. Bitcoin, 67,229 bucks. Sorry, my kids are going nuts. Ethereum, 35.39. Look at that. We have BNB down 5.41% to 610 bucks. Solana's at 153. XRP's under 50 cents, 48. Over here, ADA's really getting hit, 42 cents as of right now. I think that's sleeping giant in my opinion. Litecoin, ETC, Mr. Fully Electric in the chat said LTC is cheaper and limited. ETC for the win. LTC and cheaper limited. ETC for the, I think you meant, did you mean to say ETC and LTC for the win, or just ETC? I think ETC is going to be doing great things. This is the original Ethereum, if you guys didn't know the story behind that. But anyways, Caspa is just under 16 cents. Buying opportunities all around. You guys obviously to each his own. Do what you want, not financial advice in any form or fashion, but I will be DCAing into something today because I have some USDT that I could be selling over here. Flashbang, we have 74 on the Fear and Greed Index. Again, over 75 is really, I really care about it. Looking pretty good though. Even for a pullback, this really isn't that bad. We're still at $67,000 for Bitcoin, guys. Like, yeah, I think the election is really going to push things off more towards the summer, and as we get closer to November, we're gonna see a lot going on here. All right, let's see what you guys are gonna say in the chat. Both, yeah, fully electric. That's what I think too, man. That's what I think. I really do enjoy ETC. Actually, solo mining ETC last year was really good. I have a decent amount of ETC and a decent amount of LTC, to be honest. But Bitcoin is still about 50% of my holdings, which is, you know, a decent move. It's actually, it might be a little under, probably 45% if I had to guess. Pretty close. But I do have a big bag of Bitcoin, big bag of Ethereum, and then I have obviously Caspa, Solana, LTC, ETC, all these other coins that I think are going to do well long term. But yeah, that's that. All right, got my financial advice for the day. Bell miner, perfect. All right, let's see. Sustainable crypto. It's already out. It's 100 watts more efficient than the X16Q. Really? So it's the X16Q Pro? Is that a thing? Is it on Jingle Mining? Oh shit, typed that wrong. Damn it. Maybe. Is that gonna work? No. Let's see. There we go. Jazz miner. No? Maybe? Interesting. I don't see it. It's not this one, right? Jazz miner for a high throughput. What's the difference? QE. What the hell is a QE? What the hell's going on here? All right. Oh, right here. Pro. Oh, it's this Pro right there. Ah, got it. Okay. Let's see. Let's see. 8 gigabytes for the RAM size, which is good. 2050. So a little bit. That's more. That's 100 more. 100 more mega hash, right? Or am I wrong? And it is more efficient. Wow. A bit more efficient. It's close to the other one though. Let's see. 520 watts. What's the which one do I have? This one? Yeah, 1950. Yeah, so it's 100 more mega hashes, and it is 100 less watts. Wow, 100 more mega hashes, 100 less watts. Nice, nice. So this unit's going for 29.19. This one's going for 3,395. Coming soon. Sold out. Interesting. I wonder if it was sold at all, or if it's just like a pre-order type deal. Yeah, that's pretty much it. That's all you get. Well, jinglemining.com if you guys are interested, go check them out. I think I have a code for this. I'm not sure. Might be Chump Change XD. I have no idea. I forget. But feel free, go check them out. That's kind of neat. That's neat. X16Q Pro. Is anybody looking to get one of these? I love the X16Q, to be honest. It really is like the best home heater when you have, like, you know, you just need supplemental heat, like in my basement, for example, right during the winter. I'll just keep that thing plugged in down here. Super low wattage, just totally worth it for me. It makes a couple bucks a day, even at 30 cents kilowatt hour. So it's kind of awesome. Let's see. Watching this ad in full so you get paid. Financial failure. Thank you. I appreciate it. When is the boss getting into AI? Never. I'm never going to get into AI. It's just not, it's not feasible for me, to be honest. It's not even because I don't like it or I don't want to. It's literally just because my electric rate can't do it. There's no point. You know, I don't know how that salad stuff works, though. I did watch your video in the awkward moment of you saying tossing the salad at the beginning of that, Mining King. But I don't know how it runs compared to Vast. Does it actually oh, is it CCXD? Thank you, Sea Otter Mining. It's CCXD for Jingle Mining. I guess what was I gonna say? Oh, not being able to underclock the cards, right? I don't want to get into AI because of that. It's just, again, I don't want somebody running a 3090 or a 4090 at my electric rate, just full bore. It'd be no profits. It would be absolutely pointless. You know what I mean? So whatever. Let's see. Stop being a sissy and run it. National Grid. Yeah, National Grid. Dude, my highest electric bill ever was $3,300. Never again. Never again will I do that. That was during Ethereum mining days, and that was still profitable, which was crazy to even think about, but that was a bit much. When I got that, I was like, yeah, no. That's more than my mortgage. Just way more than my mortgage. Absolutely not. Not happening. All right, anyways, guys, listen, I gotta get out of here. Daddy duty calls. You guys have a great, happy, and safe Tuesday. I will catch you guys bright and early tomorrow morning around 8 a.m. Eastern Standard Time. And until then, let's go raid Miss Randy Hipper. She's going live in about 10 minutes, so let's do it. Have a good day, guys, and peace.
perfect.
Eat shit.